I want to have a conversation about institutional investors, the big Wall Street hedge funds, money funds, folks that are doing build for rent, buying entire communities. I want to talk about institutional investors because it certainly seems they are under the microscope. And I expect that only to get worse. What does that mean for mom and pop landlords? Well, we're going to talk to the one and only Dana Dunford, CEO of Hemlade, and figure out what she thinks. Dana, how are you?
Great. Thanks so much for having me on today.
Absolutely. So this institutional investors, generally speaking, 1,000 doors and above. Obviously, a lot of them cut their teeth in the Great Recession, where they were buying entire loan books that morphed into buying build for rent entire communities. What do you see happening to institutional investors, and then what might roll down to mom and pop investors?
Yeah. So what we've seen is that there's a huge affordability gap, right? So there's a huge affordability gap across the US, and the government is looking for ways to reduce that affordability gap. And one thing that they've started to target, but I'd say they've always had it on their mind, is investors, folks who invest in real estate. And as all of us know on the show, listening, actually investing in real estate as rentals is a good thing. You want to just increase supply, you want to have more housing on market, et cetera, especially if it's buy and hold and you're not using it for, Airbnb or short-term rentals. And so that's the first thing is there's an affordability gap. And so what has basically happened is the government, I would say there's a lot of states like California really targeting it, but you see it in the in nationwide news as well of saying, hey, there are these investors, Wall Street investors out there. They usually look at these large MSAs, so they won't go to smaller towns. They'll target larger MSAs, and kind of within, it's usually like a 30-mile radius. They don't go much outside of that. And they'll go and target, to your point, a build to rent community, or let me buy a huge portfolio of rentals. What's interesting is they only own it's just over 300,000 of the 16 million single family homes that are rentals. So they don't own that much of the market, but they buy and sell within the waves of the cycle of the market. And so right now, I would say there's a softening of those institutional investors purchasing, but at the same time, the government saying, let's put some more regulations on them. Let's go ahead and put more restrictions on everything. And there's been discussions about security deposits and how much they can charge, and what types of terms can be in their lease agreements. That has not translated down to the small, or transpired down to the small mom and pop. For the small mom and pop investor, a lot of that you don't see. And you're starting to see, even in California, when they were talking about changing the security deposit limits, they were saying it's different if you have more units than if you have fewer. And so I think that's going to be a really interesting trend, because as tenant landlord law continues to get complex, which I disagree with, I think simplification is significantly better for everyone to understand, for a tenant to understand, for an owner to understand. But as it continues to get more complicated, what you're going to see is that it's going to hit really, really hard on the institutional investors, much more than you're going to see it hit on folks like you and me. And what I think is really good about that, and why I say continue to invest in single family homes, is suddenly then you have less competition, because you have fewer of these institutionals, especially during this time when interest rates are higher, saying, I'm not going to get into that. Who knows if the government's going to turn some regulation on me and pass some law that's really going to completely mess up how I'm running and operating this business. So would love to kind of hear your thoughts, Michael, on it, and what you're seeing.
Yeah, I think there's, when I hear, institutional investors in the single family market, again, I remember the day they showed up in Fresno, and I think it was '08 or '09. It changed the game, right? They bought entire loan books, right? And we went from having every Monday morning at 8 a.m. new things to look at to nothing, right? So I
Mm-hmm.
understand, you know, the focus, and now with build for rent and all of that. But to your earlier point, they only own like 300,000 units. So
Hmm.
even if you waved a magic wand and you just said Wall Street can't play in residential, the market, that's not a lot of inventory, right? That's not
Yeah.
a lot of inventory. Now, that's a national number. I have done some research on institutional investing, and they seem to be their largest footprint is actually Atlanta, right?
Mm.
When you look at the numbers, they have a disproportionate amount of inventory in Atlanta. So if you were to force, them out of certain markets like Atlanta, it would be a problem, right? There would be a lot of inventory that were to come to market. Um, I don't see that coming. Even if they did get some kind of law put in place where they had to exit the market, they would give them a decade or so to unwind because they see the
Hmm.
problem. But to the bigger point, to the mom and pop investors, um, I really do think, to your point, they're going to create regulation, but they're always going to put a size number, 100, 1,000,
Yeah.
some number. And I would tell mom and pop investors, it's not going to impact you, right? We're going to we're going to get to four, like I talk about all the time. And, there's no concern about, getting to four kind of being under the radar, or,
Yeah.
attacked by the government. Yeah. So I think it's an interesting conversation. I know it builds a lot of emotions. I think there's a lot of people that think, if you get them, I think there's a crash bro that says they're going to own 50% of real estate by 2030. I'm like, what are you guys smoking? There's no chance they own 50% of residential housing by 2030. That's just mind
Well,
blowing.
and especially where the interest rates are, because to your
Yeah.
point, they buy in bulk. And some of the best deals, right? You're really looking for those deals. You're looking for something that you can rehab, like you do the burst strategy, whatever it is. You're looking for something that you can get a better deal on than what is just published out there on the MLS, or you see something because you see these trends. And I think, to your point, every time with these institutional investors, they're not buying one by one. They're
No, they've
buying
they've
an
given up on
entire
that.
portfolio.
Yeah.
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 And so I think it would be really hard for them, given the interest rate environment, for them to be able to make those numbers work substantially, for them to make that move. So I think, maybe if the interest rate environment were still artificially too low, how it was, maybe you'd say, yeah, that they're going to be putting a lot more into it, but I don't think so right now.
Well, let's just have another just honest discussion about these folks with, institutional investors. I suspect the return on single family investments to the headache factor is not great right now, to your point. And I expect them to kind of take their money and go play somewhere else. I think there's going to be a lot more money in distressed debt coming
Hmm.
up. And I expect Wall Street simply to say, too hard, not my area. And they're just going to pick up their chips and they're going to go play in some other market. So if the government kind of wins, they're just going to take a small player out. They're going to go take the chips somewhere else. I think that's what's going to happen.
Yeah, yeah, I couldn't I agree more with that. And I think, to your point, the under 4 units, you're under the radar. If you have under 4 units, it's really under the radar. You don't have any commercial loans out there. There's a lot from that perspective that are advantages in just getting started in real estate.
Yeah, absolutely. One of the things I love about having you on the show is that you are running Hemlane. You not only have a wonderful application for mom and pop investors, but you also have this resource tab that I don't think we talk about enough. Where can people go learn more about Hemlane and all these great resources you have?
Yeah, if you want to check out any of our resources, so we have everything from tenant landlord laws to free rent estimates in there, to buy versus sell calculators that you can download.
Nice.
So the whole gamut. There's also a pro forma in there that you can download if you're looking to purchase real estate. All of those resources are free. You can go to Hemlane, HEMLANE.com, and then just go to the resources tab. And then if you want to play around with property management, we do have not only a free plan for you to do your accounting and find and place a tenant, but also some property management packages where you can get everything from repair coordinators to leasing coordinators. Just mention one rental at a time, because you do get 20% off your first year.
That's amazing. It's so great that you do that. Again, folks, hemlane.com, go to the resources tab, rent estimators, cost, sell versus buy, all kinds of stuff there. And of course, play with the free version, do the trial. It's all good stuff. Dana, thank you so much.
Great. Thanks for having me.